Hey guys, how are you? Vladimir here. This is the weekly review of Triple B trades we took on the previous week, 7 to 11 of October 2019. As you remember, a few weeks ago we started a new format where we are reviewing our positions we decided to take, and the idea of the video is educational to explain the logic behind our trades, what kind of technical analysis we do, and what kind of market conditions we want to see in order to go and trade. As always, first of all, me and my team, of course, what we do is we analyze the market in advance. We choose our directions, how we want to do that by multi-time frame analysis, and then we are waiting for the systems to give us the alerts. So what we want to do right now is to review the trades and to explain the logic behind it. So let's go to the previous week. Previous week, by the way, was not good for us in the Triple B. So let's start New Zealandian CAD. First of all, we had this buy coming with the beginning of the week, right at the opening. So what was the logic here? Even though it made a short-term target to be reached, we went here for a longer one and paid. The idea of the New Zealand CAD was very simple and straightforward. We had a bullish divergence on the daily time frame. 4-hour chart made the cross, shot to the upside, retracing bullish hidden divergence, and basically we were expecting some corrections here as the divergence was building up, and with the opening of the wick we will want to go and to trade it to the upside. And that's pretty much it, as right here at the beginning of the week, right here, as the divergence, the hidden divergence would be developing, we expected it to hold above. There was no ending divergence here, so our expectations was basically to see this. Okay, basically another push to the upside. The 1-hour chart supported that perfectly by making us the higher highs, higher low structure. And the idea was retraces and buys. We got the retrace, bullish hidden divergence on the 1-hour chart already was in play, but as you can see, the trade didn't deliver and dropped lower first of all before making the second leg upside. New Zealandian dollar, the logic was exactly the same, and to make it very simple, let's show it here. Higher highs, higher low structure, 2 waves retrace. The expectations are to the upside on the pair, and let's have a look here. As you can see, after zigzagging up and down, unfortunately we hit the stop here, but the trade, again, as you can see, the direction was chosen superly correctly. In that case, it didn't deliver right away. We stopped out first of all. Then we continued all the way up as expected, but this time without us. The pair did not have enough energies to hold above the 20 MA. So it was zigzagging first and only then made the rally. Part of the game, the structure and the analysis here showed bullish pressure. We go with that without thinking how it will be developing. As I always say, trade facts, not expectations, not wishes, not what I would want to see or anything like that. The fact was bullish, we lost. The next trade was the gold sell, also beautiful setup. The channel from the 4-hour chart, the lower highs, lower low structure from this time frame, right? Lower highs, lower lows, 2 waves correction, tiny risk versus huge potential return, and the 4-hour chart was moving in a bearish channel. Let me just show you that right here. It looked super promising, and it indeed go down, but again, first of all we were looking for our sell opportunities here as it turned bearish. Unfortunately, this one did not work out. It provided us different setups later on, but the setup we decided to take here simply lost. As I said, the previous week was very bad in the Triple B. There were at the beginning of the week there were no rides of the trends, and at some point after the 3 days trading we gave up and say that's enough, not our week with the Triple B. And yet part of the statistics, we never can know what kind of a week we will get. The most important thing is to work clean, to respect the rules, to respect the analysis principles you work with, and to let the market do what it has to do. Some weeks would be amazing and some weeks would be bad. Part of the statistics. You can't prevent it. You can only do worse if you try. If you keep fighting the markets, you can only make it worse. And there is a great saying that if you find yourself in a hole and you are trying to pull yourself out, the first step you have to do is stop digging. So if you discover that you are in a bad start of a week, whatever you touch, superbly perfect set in the technical view, everything is ready and lined up for you, and still it doesn't work, the market has no real trends. And Triple B is based on trends. And as long as there are trends, reliable ones, we expect them to move. If they don't move, something fishy is going on, step back. There is always tomorrow when it comes to the market. Remember that. So the Aussie franc was the short-term sell opportunity we took here. The only reason was the bearish structure here, lower highs, lower lows. So we expected to see some retrace before longer term continuation, because in the longer term we are in bullish pressure here. And we are here. And this one paid, but that's all. We now change to the bullish direction as we are looking for the buys. So the idea was only for the short term. And the pound yen on the sell direction, this trade was simply wrong, bad, by my team. I still want to explain that. Our discussions already behind us. But what was bad with this trade? Basically, lack of the structure, clear structure to the downside. They were relying on this. I personally disagree on this pattern. For me, it's a kind of straight move. Nevertheless, this trade was taken, so 2 waves to the upside. They ignored this spike which went through the 4-hour chart. Something I don't love to do unless you have obvious structure in the bearish direction. We didn't, and we paid for it. As simple as that. So it's at the beginning it started to go to our direction, but anyway, this is a bad trade. They took part of the game. We learn from that. We move on, and remember, you don't pay attention to the little things, you will pay. You will pay by money. As simple as that. You don't pay attention, you pay money, and that's what happened to us. So that's pretty much it. Wanted to go over the trades, explain the logic behind it. Previous week was bad, and it's part of the game. It's part of the game. I want you to remember that. Don't panic when you have a bad day or a bad week. Don't try to think you are doing something wrong when you have such period. It's part of the game, part of the statistics. The only thing you can do is to limit yourself. Maximum loss of a day, maximum loss of a week, and so on. Okay? But you don't want to keep pushing when nothing works. And for us, that was kind of the week in the previous one. So I want to show you that it happens to everyone, including us, with all the experience. So if you face anything like that, it's part of the statistics. It's important to know that, to remember that. Keep working clean, and when you do, week after might be much better for you. So that's pretty much it. Thank you very much for watching, and I'll see you again in the next week, reviewing the current week trading. Yours, Vladimir Ribakov, Traders Academy Club.